Hello and welcome to Hot Commodities. I'm Manisha Gupta and the top headlines on the show are: the India's federal cabinet approves the increased minimum support price for Rabi crops and ups the MSP for wheat by 75 rupees per quintal, while that of certain pulses like lentils have been increased by 250 rupees per quintal and a bonus of 75 rupees over and above the recommended amount. The pulses prices ease after hitting record highs in the previous month. The festive demand, though, continues to support the prices, while industry still awaits corrective measures from the government. And the edible oil prices calmed down after hitting multi-month highs in the previous week as global prices decline. And the prices of spices as well see decline on weak exports. The prices, remember, had run up on erratic monsoons and low crop estimates. Let's start off with the MSP price hike that came in last night. The Indian Federal Cabinet has approved a plan to increase the minimum support prices for Rabi crops that are produced in the current fiscal year. MSP for wheat has been increased by 75 rupees, while that of certain pulses like lentils has been increased by 250. Especially for the pulses and lentils, there is another additional bonus of 75 rupees over and above the recommended amount. The government says that this is expected to give a strong price signal to farmers that will help them increase acreage and invest for increasing productivity in the pulses as well. Remember, that really has been a concern area as we have seen in the recent few days and months as well coming in. Let's start with pulses then, and joining us is Pravin Dongre, who's chairman IPGA, and he joins us on the show. Mr. Dongre, hi. A volatile year for pulses as we head into Diwali, as we look into the somewhat to somewhat kind of a trade here. Where do you see that headed as we go ahead?
Well, it's been a very volatile year, as we have seen very high volatility in prices, and obviously it emanates from the previous year where we had inclement rains and a lower kharif crop. So we've had volatility in prices both in India as well as overseas, and then of course followed by these knee-jerk reactions from the government of putting in stock limits on imported pulses. So I think that was an uncalled for action, which probably they have realized, and they have taken it back.
Mr. Dongre, also, do you look at the macro factors really playing in a big part here? Because the rural India demand has come back, the government policy measures have been more impulsive than corrective, would you say?
No, the population in India is increasing, and economy is doing well. The economic development is going into tier 3, tier 4 cities and into rural India. So as I've always said, that the common Indian is now looking for nutritional options, and for a vegetarian country like India, pulses is the only option. So I think the government needs to have a very concerted policy on this in terms of making a serious attempt to increase the yields, because we have one of the lowest yields. Even Africa has yields of 900 kilos per hectare against 600 average in India. The other option is also to look at farming overseas. I mean, the Chinese are already ahead in that, and they have access to land in Africa and other countries where they are farming and preparing for the future, because yield, the land is limited, and the competition for land vis-a-vis other crops, pulses is always going to face. So unless a concerted policy is in place, I think we will see imports increasing year on year.
We also have in studios Yogesh Mehta, who is founder SpicExim, and let's go to him as well. As Mr. Dongre was pointed out, Mr. Mehta, that we have seen monsoon concerns, there have been government measures as well, and of course the decline or scarcity in crop that has led to a run-up in case of pulses. How would you look at spices? Because that has been a similar case here also. The run-up in the prices, the erratic monsoon, the lower acreage is some of the things that we read for spices also. But jeera prices in the last couple of sessions have seen a bit of a decline because the exports have not picked up as much. But to start with, how would you look at the whole of the previous year, and how are you getting into the new Samvat?
The erratic monsoons, I feel that the turmeric crop is going to be affected very badly. We are going to have a lowest productions 2016. We also expect the lowest crop of black pepper which may be around 30 to 35,000 tons against the normal crop of 60,000 tons. So the prices are going to remain very firm next year. About the low exports of spices, because the last year from April 2014 to 31st of March 2015, cumin seed particularly we exported 155,000 tons. Syria has exported 20,000 tons and 6,000 tons by the Turkey. So overall exports were 181,000 tons against the consumption of world is 140,000 tons. So we have exported more cumin seeds, and that is the reason the cumin seed prices are decreasing every day. The next year crop will also be in a problem because last 2 years the farmers have not got the remunerative prices. So they won't be sowing much, especially in Gujarat, particularly in Sabarkantha and Surendranagar district. They will opt for the coriander seeds, even though the coriander seed crop this year was bumper to bumper. But unfortunate and seasonal rain has damaged 60% of the crop. So the prices have gone up, and we could not achieve the target of coriander seed, which the spices board has kept to 50,000 tons. But still, the Gujarat farmers and the MP and Rajasthan farmers will go for coriander.
Just sticking to coriander, because that really has been quite volatile in the last few days. Some unprecedented falls is what we saw in 3 to 4 sessions as well. Seems to be stabilizing at this point in time. Even a bit of an uptick coming in there. What's your sense on coriander to start with as we move ahead?
See, that is a lot of coriander stocks pending with the NCDX as well as with the speculators. They would like that the prices should go up, and they want to dispose of their stocks before the new crop arrives. Actually, the world this year, throughout the European market, European countries, the coriander crop is very good, satisfactory. Prices are 50% lower than the Indian coriander seeds. Last 6 months, we have not exported any coriander seeds. At the figure which I have estimated from April to October is around 20,000 tons. And I see that the coriander prices has to come down to 80 rupees per kg, and then only there will be a possibility once again to go up.
Fair point that. Some bit of an uptick coming in. And while about spices, we always talk about exports. But Mr. Dongre, coming to you, when it comes to pulses, we always talk about imports because of the kind of dependency that we have on the imports there. What's your sense? What kind of a number are we working on that?
Yes, I think pulses should be given the recognition that it requires. The government should realize that this is a commodity, that it should be given the desired importance, and the government should intervene and put its money where the MSP is, and procure pulses at the MSP and put it into the public distribution system, because every farmer looks at options of what he needs to plant for the year, and he also runs it as a business. It's an economic model. So if it doesn't make economic sense, pulses could lose ground to other crops which are better paying and higher yielding. So the government should not allow pulses to go below MSP, and higher prices will encourage farmers to grow more.
Mr. Dongre, what's your sense on the prices going ahead? Because that really is a very important point. We've seen tur dal prices at record highs, chasing 200 plus kind of levels. The production levels, of course, are lower. But with the MSP now coming in on the higher side for Rabi, do you think that things might change now?
Well, tur dal is an exception. It's from a whole plate of 17 pulses to 20 pulses that are available. Tur is one such exception where the production in the international market was considerably lower, also parallel to what happened in India with inclement rains and then a dry spell this year. So tur is the odd one out, and of course now with the stock limits being taken off, we have already seen a very sharp correction in tur. And I think tur prices will be low and take us right through the Diwali season without too much of pain. We will see a sharp correction in the coming months. But on a longer term, then we have our Indian crop in December, and we have the Burmese crop. So tur prices should remain where they are for the rest of the year.
All right, so we may have seen the run-up or the record highs in pulses going ahead. As Mr. Dongre is pointing out, we could see some further correction because the global crop as well as the Indian crop will start hitting the markets by November and December as well. But coming to you, Mr. Mehta, we already talked about on the cumin prices and also the coriander prices on what we are expecting there. But going forward, how would you look at black pepper and turmeric? Because these two commodities have been equally volatile if you look back into the year.
The black pepper, during the last International Pepper Community meeting last year, November, in Vietnam, the Spices Board and the Indian government declared that the production is 75 to 80,000 tons, but it proved wrong. The crop was only 55 to 60,000 tons. Out of that, 48,000 tons is being consumed by India, and therefore the prices from 300 to 700 has been risen up. Again, the next year, the crop is only 35,000 tons. Out of that, I expect that 24,000 tons will be the local consumption. So I see the further bullishness in the black pepper market in 2016. In turmeric, last 3-4 years, the crop is coming out very low comparison to the normal crop. Carryover for stock is also very less, and the new crop is expected around only 400,000 to 450,000 tons, which is very, very low. So I see that the price of turmeric will touch 100 rupees and beyond that.
Mr. Mehta, as we get into the new year, as we always counted from Diwali, if you had to pick one spice where you want to go short and one where you had to go long, which one would you pick?
Certainly, I will go for black pepper.
On the long side?
Yeah.
And on the short side?
Turmeric.
And how would you look at the other spices? Do you think they would play in a range?
The cumin seed and the coriander seed will remain same. It's not going to be very high prices. Cardamom is another thing where India has produced more than 24,000 tons, but still we are not able to catch the global demand. Guatemala this year, the crop is very, very less, around 27,000 tons, but the Guatemalas are offering between $3 to $14, while Indian cardamom starts from $10. So the longer run, if I say that, yes, the cardamom in India as well as Guatemala is going to be remain very firm.
All right, so that's the whole view that we have on pulses coming in from Yogesh Mehta, and of course on spices from Mr. Yogesh Mehta, and pulses of course from Mr. Pravin Dongre. Thank you gentlemen so much for joining us and giving us that complete sector view. But with that, let's go for a short break. When we come back, we'll speak about the sugar and the edible oil space as well, and how the last year has been and what is expected of course in the coming 1 year from these sectors. Welcome back, and we are discussing the agriculture commodities on how the year has been in the previous one and what is expected of course as we enter into a new Samvat. Let's talk about the edible oil space, and B.V. Mehta, ED Solvent Extractor Association, now joins us. Mr. Mehta, hi, good to have you. Take us through the oilseed production year on year and the edible oil prices as well as we have seen in this current one.
One thing, the last year was a bad year in terms of the rainfall. The agricultural production, including oilseed productions, went down heavily. However, price was stable or rather than reduced thanks to the highest record crop in the world over, and the price was the lowest. So that was a silver line. Although we had a short crop, the price remained under control or rather remained low.
That looks like a good
during
news.
The year.
That sounds like a good news, Mr. Mehta. But the Rabi crop also, the sowing for that has started. The government is up the MSP also. Do you see good times ahead for this sector?
First thing about the Rabi crop, now in the last few days the temperature has fallen. That's a good sign to increase the area under Rabi. Now look at the rapeseed. This time the rapeseed acres should increase, but then farmer will also look at the competitive crop like a pulses, chana, mung. So we have to wait and watch whether the area increased is in pulses or the rapeseed. I have my little worries that there could be more area increase in the chana at the cost of rapeseed or mustard seed. About the price level, international prices are low. I don't think so we have to worry on the price front. Prices are quite comfortable and internal supply is very heavy. Till January, February, I don't think so the price will go up in the near future.
Well, the outlook on the prices, you don't think they will grow up, but of course there are concerns on the pulses acreage that might go up on the expense of oil seeds. So what is your sense on the government, the duty structure? Do you see any changes on that?
No, that first thing I divide your question in two parts. One, the import when is concerned, you can expect if the government reduce the duty. Today the duty is about 30% on oil seeds, whereas in oil is at 12.5 or 20%. So, let us reduce the duty. Is an innovative duty structure. Let us correct the innovative duty structure. The duty should be lower on the oil seed. If government reduce the duty on oil seed, say 5 or 10%, there will be workable parity and import can start. And that will also checkmate the domestic price also. Now, look at here, the soybean price is unrealistic in the market today. We are not able to export the oil mill. We are not able to process. There is a disparity in the processing. So, best thing, if the import starts, that will balance the scenario. Both the farmer will also have comfortable and the processor will also be comfortable, and consumer will get the oil at the right price.
Mr. Mehta, thank you so much for joining us. We'll let you go on that. So that's the view coming in from the edible oil sector. Needs changes in the duty structure, and that perhaps would help the industry going ahead. Prices, of course, he says, are expected to stay stable. But let's talk about sugar now, because that has been in news as well, and government has come out with various measures onto that one in this current Samvat, and we have seen a turnaround coming in for prices. The last 3 months essentially have seen the sugar prices gain up by nearly 15%. On your screens, that's how it has been. Abinash Verma, DG ISMA, now joins us with his sense on that. Mr. Verma, hi. It's good to see you. How will you sum up the past year for sugar industry? The past 3 months, of course, have been quite essential.
I totally agree with you. Last 1 quarter, the government steps have been positive in the sense that government has taken steps to give directions to the industry to export around 4 million tons, which was the biggest burden on the industry and pushing down the prices tremendously. But if you look back the last 1 year, last Diwali to this Diwali, the whole story, the fortunes of the sugar industry has not been good. If you just compare the ex-mill sugar prices in October, November last year, and now this time in October, November this year, the prices are still about 4 rupees or 3 rupees per kilo lower than what it was during this time last year. Secondly, the industry has lost a lot of money. The farmers' arrears have built up. It's around 7,000 to 8,000 crore today as compared to just about 3,000 crore last year. And that 3,000 crore last year was also mainly on account of Uttar Pradesh. But this time the cane price arrears are no longer restricted to only Uttar Pradesh, but it has spread to other states which traditionally have not known or experienced cane price arrears, like Maharashtra and Karnataka states also. So the story has not been good in the last 1 year for the sugar industry. But if you look at the last 3 months, there seems to be some reversal in the fortunes, and there seems to be some improvement towards better days for the industry, at least in the next couple of years, it seems.
Avinash, your point is well taken, but do you see the sugar cycle now changing, because the global prices are up? We have gained in last 3 months, and there have been weather concerns as well. It's a lower crop output as well, which the markets are looking at.
Yes, I believe so now, and I have 2 or 3 reasons to believe that way. First of all, if we are able to push about 3 to 3.5 million also out of the 4 million ton of sugar export target that the government has given the industry, then we see that almost all the surplus over and above the normal carrying forward stocks that the government would like us to carry, almost all the extra surplus getting out of the country and the demand supply position remaining the same. Secondly, next year's production, ISMA is estimating about 27 million tons. Next year, because the season has already started. So the current year's production for 15-16, we are estimating at 27 million tons. The government is estimating that at 26 million tons. There are concerns in the market that the rainfall has not been good even in the retreating monsoon in Maharashtra and northern part of the Karnataka. So therefore, next year's production seems to be almost matching the domestic requirement. So if there is a balance between domestic requirement and the production next year, then obviously the market sentiments might be better. Thirdly, the global experts, the experts in the global market are also expecting that next year, after about 4 years of surplus sugar production world over, there is expected to be a deficit, and therefore that deficit should give a chance to India to export some of the surplus.
Abinash, we just about seem to be closing the current year on a positive. How would you look at the next Samvat until next Diwali? What's your sense? Do you see further gains in sugar prices?
Very difficult to really make an estimation for the full year next year. But as I mentioned, everything will actually depend on how well we respond to the export targets given to us by the government. If we are able to export a major part of the 4 million tons actually told by the government to us to export, if we are able to export most of it, then I see the domestic exchange prices firming up. That is number one. Number two, next year's sugar production is not going to be as much as the last year's production. So there will be a kind of a match, consumption and consumption and production matching there. And therefore, next year we believe that we will have a more or less even balanced domestic production and domestic consumption scenario. And therefore, next year's sugar prices should be much better than what we saw in the last year.
Abinash, when you say that you are expecting the sugar prices to be much better, would you want to stick your neck out and actually come out with a range on that?
I certainly see an improvement if we do the exports, but very difficult to make an estimation of how far the sugar prices are going to go. But I can certainly mention one thing: it's not going to run away, because the global market is not short in a big way. There are availability of some sugar balances, in almost all the importing countries. So therefore, I don't see the sugar prices running away, but certainly we expect that the sugar prices will improve next year.
All right, Abinash, thank you so much for joining us. On that positive note on the sugar prices is all the time that we have on the show as well. Thank you for watching.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.